Good morning, guys. Hi, Tripti. What do you want? I still haven't done consignment account. Don't worry, I'll be doing it. Tripti, I'll be doing it today evening here. Hey, Sri Charan. Morning. Morning, Nikita. Guys, I'll wait for 5 more minutes before I start. And morning, Arini. Ah, morning. I think we'll start doing the last question before they come in. Guys, this is something typically what you get in your exam. I hope the audio and the video is fine. So let's do this question. Bhagavati Limited invited applications for 2 lakh shares of each. Application is paid as follows 352. All applications were received for 3 lakh shares and pro rata allotment was made. What does pro rata allotment mean? That you are doing towards you are adjusting the extra money towards the future calls. Money overpaid on the application was adjusted towards the allotment money B was allotted, failed to pay the first and the final call money. His shares were forfeited. Out of the forfeited shares, 2,500 shares were reissued as partly paid. Pass necessary journal entries to record the above transactions in the books of Bhagavati Limited. Examination question, uh, May 2020. So let's try looking into it. How do we answer it? So first thing, let us, because it's a pro rata allotment, we know we are talking of what? Proportionate allotment. Now, how many shares are issued? How many shares did you get an application for? Is the first question. We have got application for how many? 3 lakh shares, and I'm issuing 2 lakh shares. So I've got extra money towards 1 lakh shares. Yes or no? Now, in terms of it, if I look into it, what happens for every 3 shares applied? Can I say logically that you have got 2 shares? For every 3 shares applied, logically, can I say that you have got 2 shares? Done? So let's try understanding. If B was allotted 3,000 shares, how many shares he would have applied for? Is the question. We know if you apply for 3 shares, you get 2 shares. So if you are getting 3,000 shares, how many you would have applied for? Are you clear? Anyone any doubt till here? Now, let us understand how much money did you receive on application. The application money you received is 3,000 into 3, sorry, 3 lakh into 3, 9 lakh rupees. But how much is the money due on application? Is 2 lakh into 3, 6 lakh rupees. Are you clear? So how much extra money I have? How much extra money I have? I have an extra money of 3 lakh, which I can use it for the allotment. Are you clear? Now, first entry, let me do bank to share application 9 lakh, 9 lakh, share application 9 lakh, to share capital 6 lakh, to share allotment 3 lakh. Yes or no? Next one, what is the money on allotment? 5 rupees. So the journal entry becomes share allotment account debit 10 lakh to equity share capital 10 lakh. Next one is I'm receiving the money that becomes bank account debit to share allotment. Correct, Rakshita, but pro rata I told you we are going to be adjusting towards the future calls. To share allotment 10 lakh. How much money are you going to be receiving in the bank? How much money will you be receiving in the bank? Seven lakh. The 3 lakh, I've already created the share allotment here. So bank account to share allotment is not going to be 10 lakh, but it shall be 7 lakh rupees. Are you clear? Why? Because 3 lakhs have already passed an entry for. Are you clear? Does anyone have any doubt here? Superb. Last one. What's going to be my last entry? Final call account debit 2 into 2 4 lakh to equity share capital 4 lakh. But are you receiving the money from everyone? No, I'm only receiving money except from the 3000 guys. So I'm receiving money from what? 1,97,000 into 2 is the money I'm going to be receiving. So what will be the journal entry? Bank account debit 3,94,000 to final call 3 lakh 94, final call 4 lakh. The shortage 6,000 will go to the yes or no? Then they are saying the shares were forfeited. If you forfeit a share, see 3,000 shares. Now face value called received. How much? 3, 5, 2. All are called. Received, yes, yes, and no. Correct? Now, if I try putting it across in terms of it, what's going to be my share forfeiture entry? Equity share capital account debit 30,000. To share forfeiture how much money is going to go to share forfeiture? 3 plus 5, that is 24,000. To call scenario 6,000. Correct? Now guys, see here, one of an easier way to do this is, see in the share forfeiture, how much is the value per share? 8 rupees. Correct? Yes or no? Now you are reissuing it. Are you issuing entire shares? No, you are issuing only 2,500 shares. You are reissuing it at what price? 6 rupees. So what you do is, share forfeiture amount is 8. Add up the reissue price. Add up the reissue price. So when you add up the reissue price, see here, on the same 2,500 shares, originally I got 8 rupees. Now I am getting 6 rupees. Total I have got 14 rupees. But what is the face value? Face value is 10. Therefore, I am making a 4 rupees profit per share. This is one way of doing it. Are you clear? For the capital reserve, this is one way of doing it. Are you guys clear? So my capital reserve will be 4 into 2,500. 10,000 rupees. This is method number 1. Or I'll tell you method number 2, how do we do it? See here, in the share forfeiture value, I have 5 plus 3, 8 rupees. This is reissued at 6 rupees. So on the 2,500 shares, I'm getting 14 rupees, whereas the face value is 10. Therefore, I'm making a profit of 4 rupees per share. 4 rupees per share on 2,500 shares will be 10,000 rupees, which will go to the capital reserve. The other method, for the ones who want to stick on with the traditional method, see here. Now this 6 shares are issued at 6 rupees. So what is going to be the journal entry? bank account debit 25,000, sorry 15,000 to equity share capital 25,000. So the balance goes to share forfeiture account debit 10,000. Done. Now how much should I transfer to the capital reserve? See here, the share forfeiture account 24,000 is for 3,000 shares. The share forfeiture 24,000 is for 3,000 shares, but I am reissuing only 2,500 shares. So what should be the share forfeiture amount? Cross multiplication. Sricharan, I'm not issuing all the shares, Sricharan. I'm issuing only 2,500, so I cannot take 14,000 as my profits. Guys, for 3,000 shares, if my share forfeiture amount is 24,000, for 2,500 shares, what should be the amount? Now, since I am issuing only 2,500 shares, I'll check how much was utilized for the issue. How much have you utilized for the issue? I have utilized only 10,000. Therefore, the balance 10,000 has to be transferred to the capital reserve. So it will become share forfeiture account debit 10,000 to capital reserve. Are you clear? Guys, in the first question when I did share forfeiture account, Sabrish, for this question it's not required, Sabrish. Maybe you should just go back on the video, Sabrish. I'll just wait if required. Guys, here he has 24,000 rupees for 3,000 shares. He is only reissuing 2,500 shares. So if 24,000 is the share forfeiture account for 3,000 shares, what should be the amount for 2,500? When I did it, I get 20,000. Since I'm issuing only 2,500 shares, when I issued it for 6 rupees, I'm losing out 10,000 rupees overall on the 2,500 shares. But I already had how much? 20,000 in the account. Since I had 20,000 in the account and I'm losing out 10, I'm still left with 10,000 rupees. That becomes my profit. Are you clear? Okay. Now, the next topic is shares can be issued for a consideration other than cash. There are some questions in the study mat, Harini. I'll send you guys some questions once the class are over. Don't worry. The next one is issue of shares for a consideration other than cash. What does it mean? Let's say I purchased a fixed assets from Sabrish. What's the journal entry? Sricharan, I sent you the contact mail ID. Please contact with them, sir. Let's say 1 lakh. Now, if I have to pay money to Sabrish, what's the journal entry? Correct? Now, instead of this, you give it to cash. So instead of cash, if you give shares, it will become 2 equity share capital account. Here, since you're not giving money, instead of paying somebody a money, you're giving them the shares. This is called as consideration for other than cash. Are you clear? Done? We are done with your topic. We are going to be doing unit 3 now, the last topic of the. Yes, Ashish. Let's do it. What's there? B Limited issued 50,000 equity shares of 10 each, payable 3 on application, 5 and 4 on the first call. All this were subscribed. X holding failed to pay the allotment money and call money. Y holding 2,000 shares paid to fail the call money. And those 3,000 shares were forfeited out of 2,500. Superb. So let's try doing it. Sabrish, Kumar, see, just follow this part of it. Now, how many shares X is holding? How many shares Y is holding? X is holding 1000 shares, Y is holding 2000 shares. Yes or no? Now, X 1000, Y 2000. Now, what I'll do face value premium. First for X and then for Y. How much is the face value? 3, 3 and 2 and 4 called received. Correct? Uh, have you called all the three? You have called all the three. This guy has paid this, not this, not this. Correct? So, for Mr. X, the share forfeiture entry will become share capital account debit. Premium is received or not received? Premium is not received. When premium is not received, what you should do? Guys, when premium is not received, what you should do? You should be taking. So, share capital account debit 10,000. Security premium account debit 2000. To share forfeiture account to calls in arrears account. Share forfeiture account will be the money received, which is 3000. The balance 9000 will be calls in arrears. This is for X. Are you clear? Now let us do it for Y. Now for Y, what has happened? You have got this, but not this. So should you reverse the entry for premium? Guys, I'm only doing the rectification entry because this is an examination question. I'll just show you the solutions after this. For B, the share forfeiture entry will become, see here, equity share capital account debit 20,000 to share forfeiture account only to the extent of, because premium has to be ignored once you have received, to share forfeiture account 12,000 to CIA 8,000. Are you clear? Yeah, yeah. So if you combine both the entries, I think your journal entry would look like this. Your journal entry would become equity share capital account debit 30,000, security premium account debit 2,000, to share forfeiture 15,000. Kumar, this is going to be your answer when you combine both. You have to write the entire thing, Sabrish, because I don't have space. That's the reason I'm writing CIA. Now, are they issuing the entire shares? They are reissuing how many shares? They are reissuing 2,500 shares at 8 rupees. Are you clear? Now, in this 2,500 shares of 8, they are saying first they are going to be issuing the entire 1,000 shares of X and then balance Y. That means in this 2,500, the breakup is 1,000 of X and 1,500 of Y. Yes or no? Done? Now, see how much was the money left in the share forfeiture account of X and how much was left in the case of Y. I'll teach you two methods, whichever is comfortable for you guys, you follow it. How much was the share forfeiture? Sure. Now, guys, remember this. For why this 12,000 is for 2,000 shares, but I am issuing 1,500. So, how much should be the share forfeiture proportionate? For X, no problem whatsoever because entire 1,000 is getting used. So 1,000 ka 3,000 will entirely be available for. Yes. Are you clear? Guys, did you understand this working note? Yeah. Guys, see here. Let us try understanding two things. For Mr. X, you are issuing 1,000 shares at 8. The journal entry will become what? Bank account debit 8,000. Share forfeiture account debit 2,000. To equity share capital account. Yes or no? Correct. This is for Mr. X. Now if you see, Mr. X share forfeiture account had 3,000. He has utilized what? 2,000. Therefore, how much should go to capital reserve? Are you clear? Are you guys clear for Mr. X ka shares? Done? Now let me come to why. You are issuing 1,500 shares. So what's going to be the journal entry? Bank account debit. To equity share capital 15,000. Yes or no? Now, for Y, for 1500 shares, how much was there in the share forfeiture account? It was 9000. Out of 9000, how much did you utilize? 3000. Therefore, how much is the profit? 6000. So 6000 from Y, from X it is 1000. Therefore, the total profit is 7000. So the journal entry is share forfeiture account debit. Are you guys clear? Kumar? You can do the combined entry, or after all the calls are over, you can pass individual forfeiture entries also, put in narration, that's also fine, Chirag. This question, guys, was asked for 15 marks. I'll share you the solution now. Just look into it. Maybe you can pause the screen later. Just look into it. I'll paste the solution here so that it's easier for you guys. Guys, in the exam, you have to do all the entries, so I'm just sharing it across so that you can see the solution later when you're done with it. Nikita, I'll be sharing the solution in the group, don't worry. Guys, done? Trupti, you need to. Trupti, this is basically our students, Trupti, who are there. Maybe you should get into the contact group, or maybe you can reach out on the app separately. Kumar, let's just. Tripti, maybe you can just download the app. There is a doubt clearing session there. You can just post it across. Somebody will help you out. Okay. Let's go one by one. See you. Kumar, see you. Equity shares. Okay, guys. Very rarely, but if you get it, it's going to be part of the 15 mark. Let me try understanding how do I write my balance sheet question. See, out of the company issued 50,000 shares, out of which X had 1,000, Y had 2,000. They did not pay, so the number of shares is 47,000. They issued 2,500 again, so the number of shares is 4,049,500. So my share capital will be 49,500 into 10, 4,95,000. Sri Charan and Trupti, there is a doubt clearing session here. Doubts in the session. I don't think so. Whether it's there on the free one or the paid one, just look into it. Or maybe connect with contact at arivupro.com or 968665253. They would be helping you out. This is the money of the share capital. This is the first one. Now, second one, let me come to the share forfeiture account. For X, you had 3,000. For Y, you had 12,000. Out of which you used back X ka 2,000, Y ka 3,000, and capital reserve you transferred 1,000, and capital reserve here you transferred 6,000. Therefore, you are left with nil. Here you are left with 9,000. So the balance 3,000 is not utilized. And if you ask me, Arjun, why it is not utilized is, this is for that 500 shares which I did not reissue. Are you clear? Guys, are you clear with this? My share forfeiture account, first, when I cancelled it, I had a balance of 6 and 3 and 12,000. Then when X and Y shares were reissued, we used this. This was the money which went for the capital reserve. So not utilized is 3000. So that is going to appear in my balance sheet added to the share capital. Are you guys clear? Because all the shares face value is 10, no, Ashish. Even though I'm, see here, Ashish, just see this question. When I'm issuing this 2500 shares at 10 each, my equity share capital is still 2500 into 10. I told you equity share capital will always get credited with a face value. Done? Now, the next one, if I come to the capital reserve amount, I know the capital reserve amount is 7000. Last one is the cash. Now, for cash, I need to add up all the journal entries wherever the cash is. 1 lakh 50, then 2 lakh 45, and 1 lakh 88, then 20,000. See, I've come up with all the values. Are you guys clear? So guys, take a break and come back at 11:30. We'll be starting the debentures chapter. Come back at 11:30. We'll be starting the debentures chapter. Good evening, good afternoon, guys. Yeah. Now, what are debentures? Debentures are a debt given to the company. Now, what is the difference in case of a share versus a debenture? For shares, we pay dividend, whereas for debentures, we pay interest.
After that, if you want to take just the card.
Guys, are you clear? Same. Phone. Yeah, for debentures you have to pay interest. Dividends are paid only when the company makes profit, whereas interest is paid whether the company makes profit or losses. So we say dividends are appropriation of profit, whereas interest is a charge against profit. Are you clear? Done. The next one is I'm comparing the dividend of an equity shareholder with a debenture holder ka interest. The interest rate is fixed, whereas equity, the rate of dividend is not fixed. Next one, equity shares, there is no compulsion to buy back, whereas in case of an equity, debt, you have to pay them back, pay the capital amount back. Are you clear? Equity shareholders are the owners, whereas debenture holders are the creditors of the company. Are you clear? Guys, just 1 minute, I have a call. Yeah, guys, sorry. Till here, are you clear? Guys, see here. Now there are debentures. There are two things. There are different kinds of debentures. Now, one is called secured, another one is called as unsecured. What do we mean by a secured debenture? Is if the debentures, right? Let's say you don't pay money to the debentures, then what will happen? You will have to make sure that your assets, it's like pledge, your assets are going to be pledged against those debentures. So what will happen if you don't pay the debentures the money back? The debenture holders will have the right to sell the assets. Such kind, we call it as secured. The unsecured is basically when you do not have any pledged against any asset. Now that is, you're trying to just give them a promise that you're going to be paying them interest. Now with regards to this, we need to understand couple of points. First one, there is something called as a fixed charge and something called as a variable charge. Floating charge. What do we mean by fixed charge? Let's say I have a building and I am creating a charge against that building. Let's say I am the owner of Taj Mahal and I am giving a loan against Taj Mahal as a guarantee. So that means if I don't pay the interest, the bank guys can sell the Taj Mahal. This is called a specific. Here I know which assets I am going to be pledging against, which is called as a fixed charge. Now let's say another thing called as floating charge. Floating charge is generally done on the group of assets. Done. The next one is redeemable, irredeemable. We know what is redeemable. Redeemable is that you have to pay the money back. Irredeemable is that you don't pay the money back. Negotiability, registered and bearer. What is registered is if your name is been mentioned against the debentures in the company register of debenture holders, then we call it as registered. Bearer debentures is, it's like a certificate. Whoever is holding that certificate, they will be getting the interest. Bearer means somebody who's holding it. Next one, priority, first mortgage, second mortgage. First mortgage is, let's say for an example, I have Taj Mahal. I am the first mortgage and you are the second mortgage. That means when I sell Taj Mahal, first loan will be cleared to the first mortgage guy, then you will be paying it to the second mortgage guy. Are you clear? Now, what is the difference between a debentures and a shares? I want you guys to understand it. Debentures are loan and you have to redeem it no matter what happens. So when the company is issuing debentures, right, they say that debentures are issued at 1,000 rupees, let's say 14% interest. You will be paying the money back after 4 years. So what it means, 1000 debentures, 14% at 4 years time. Are you clear? Now, let's say debentures are issued at 100. You can either redeem it at 100, 110 or 90. Are you clear? So when you're issuing it, you'll be telling at what price are you going to be redeeming it. If you're redeeming it at 100, it means you're redeeming it at par. If you're redeeming it at 110, that means you're redeeming it at premium. Here you are redeeming it at discount. Are you clear? Now if you are issuing it at 100, redeeming it at 100, there is no profit, no loss. If you are going to be issuing it at 100, redeeming it at 90, you are making a profit, right? Guys, understand this. At the time of issue itself, I'll be telling at the price at which I'll be redeeming it. So I'm going to be making profit in the future, and accounting ignores future profits. When I issued debentures at 100 and I'm giving a premium at 110, I'm giving a premium at 110. I am losing out 10 rupees. This 10 rupees loss has to be recorded on the date of debentures issue. Are you clear? So you need to understand, debentures issued at par, redeemed at par, redeemed at discount, no problem. Debentures issued at discount, redeemed at par, redeemed at discount. Again, I'll only be recording the discount entry. That is like equity shares. Debentures issued at par, redeemed at premium. Debentures issued at discount, redeemed at premium. Debentures is issued at discount, redeemed at premium. There is going to be a new entry, so I'll be explaining this now. So these are the multiple combinations which can happen. Now for all our understanding, what I will do, I'll issue my debentures at case 100 par, redeemed at 110, 100 and 90. Let's take these three cases. Okay. Now, guys, I'll tell the case number one, then we'll start looking into the journal entries. Let's look into it. Issued at par, redeemed at par, redeemable at par. What is the journal entry for equity shares? If equity shares are issued, the first entry becomes bank. To share application, here it will become debenture application, 100, 100. The second journal entry becomes debenture application account debit to debentures. Earlier it was equity shares, here it's going to become debentures, 100, 100. So when debentures are issued at par, redeemable at par, it is same as equity shares. Are you clear? Now, if debentures are issued at par 100, redeemable at 90, what is going to be the journal entry? This will be same as issued at par and redeemable at par, because 90 I am making profit, I shall not be recording, so the journal entry will be the same. Clear? Now let me come to this. Debentures issued at 100, redeemable. Guys, please remember, I'm saying redeemable. You're not redeeming it now, you will be redeeming it in the future. But I should be posting the entries because it's a future loss on the date of issue itself because of the conservatism principle. Are you clear? Now, see, when I'm issuing debentures at 100 and redeeming it at 110, let us first do the application entry. That is what? Bank account debit 100 to debenture application 100. Are you clear? Done. Now the next entry would have been what? Debenture application this will continue, but since this 10 rupees is a future loss, whenever debentures are redeemed at a premium, guys, please remember this. Whenever debentures are redeemed at a premium, I always have to make one journal entry, that is to premium on redemption. See, in the future, I know I will be suffering a loss, so that loss has to be recorded today itself. That loss has to be recorded itself. How do you record this loss? You'll always write an entry: loss on issue of debentures 10 to premium on redemption 10 rupees. Are you clear? This is going to be every time whenever you have a premium entry, you will have to be passing this. Now, guys, let's come to this. Everyone, please understand. Let's say debentures are issued at 110, redeemed at 110. Debentures are issued at 110, redeemed at 110. What will be the journal entry? Now, when debentures are issued at 110, what will be the journal entry first? Guys, treat it as the equity shares itself and do the journal entry. It becomes easier. Bank account debit to debenture application 110, 110. Then you do this entry, debenture application 110, to security premium 10. Are you clear? Now, come guys, in the exam, always remember this. You will be comparing the face value with the redeemable amount. You will be comparing what? Face value with the redeemable amount. Are you redeeming it at premium? Yes, but only difference is when you're going to be redeeming it at premium. Guys, since you're going to be redeeming it at premium, what is the premium amount? 10 rupees. Whenever there is a premium account, told you we have to follow a debit or a credit entry. Clear? So we'll be writing an entry as what? Loss on issue of debentures 10 to premium on redemption 10. Sabrish, see here. This is my journal entry for recording at premium. Sorry. Sabrish, this is my entry for recording it at premium. I told you whenever you are issuing any security more than premium, it should go with a security premium account. The story ends there. What you are redeeming is a 100 rupee debenture for 110. See, the 10 rupees what you are issuing is the profit which I have already recorded. But you are redeeming it at 110. That means there is another 10 rupees loss also, which is to be recorded, which is my future loss. That's why I'm recording that extra entry. Sabrish, face value being 100, if you're redeeming it, if you're issuing it at 110, that means you're issuing it at premium, no sir. You're issuing it at a premium of 10 rupees, no sir. No sir, I told you no. Issued at 110, redeemed at 110, and I told you also the premium is 10 rupees. Correct, Medha? Now, guys, let's try looking into it. Let's say debentures are issued at 90, face value being 10, redeemed at 100 is case 1, at 110 is case 2. I want you guys to try. Guys, write your journal entries for case 1. Face value 100, sorry, my mistake. Everyone, please do the case 1. So the first entry will be bank to debenture application 90, 90. The second journal entry becomes debenture application to debentures. Debenture application is 90, debenture should be 100, 10 rupees becomes discount on debentures. Are you clear? Please remember this, debentures will always get credited like the share capital or at the face value itself. Kumar, that's okay. But as long as we have multiple kinds of debentures we write, but it's okay. It's not something that which is extremely important. First, get your amounts right. We'll be discussing about it, Kumar. Now, guys, I want you to look at the case 2. Rule remains the same. See here, debenture 90 to debentures 100, discount on debentures 10. Now, what did I say? You compare this with a premium amount, you're making a loss issue 10 to premium on debentures 10 rupees. Are you clear? Are you guys clear? Guys, are you clear? Guys, are you all clear? Let's start doing the questions. Right? Now, let us start doing our questions and let's try understanding one by one. Few things which are smaller. Rakshita, the premium is on redemption, but it's my future loss. Since we follow conservatism principle of accounting, future losses has to be recorded. That is why I'm recording, because I know on the date of issue itself that there's a future loss. Therefore, I shall be recording it on the date of issue itself. So when we see the question, you will understand it better. Let's go one by one. Guys, see the question. Amol Limited issued 40 lakh 9% debentures of 50 each, payable on application as per the mentioned in the prospectus, redeemable at par anytime after 3 years. That means you know you will be redeeming it at par. So the journal entry shall be same as equity shares. Now when you're writing your debentures, right, we always write debentures like this to 9% debentures account. Why? This 9% represents the interest rate on the debentures. So when you're writing it, see your bank to debenture application to 9% debentures account. Are you clear? So guys, what's going to be the journal entry for the first one? Guys, what's the first journal entry? Bank to debenture application 20 crores, 20 crores. Then debenture application to 9% debentures 20 crores, 20 crores. Are you clear? Guys, see the second one. Pass the entry for the second one. Guys, everyone do the second one. Atul Limited issued 1 crore debentures at 100 each at a discount of 10%, redeemable at par at the end of 10th year. Money was payable as follows: 30 on application, 60 on allotment. First one, correct. Bank to debenture application 30 crore, 30 crore. Then that is interest, Rishabh. That comes in when you have to pay interest. That's an end of the month. That is just a name for you right now. Debenture application account debit 30 crores. Guys, remember this. The what is the percentage of discount? 10%, right? That means instead of getting 100, if you see 30, 60 and 10 you're getting. 10 is the discount. They're paying 30 on application, 60 on allotment. The discount entry generally will be recorded at the time of allotment. The discount entry will always be recorded at the time of allotment. So debenture application account debit to 8% debentures 30 crore. This is for the first entry of application. Are you clear? Now see the second entry. For allotment, first I have to create is the due entry. What's the due entry? Debenture allotment account debit 60 crore to 8% debenture account 70 crore. The 30 crore is the discount. Are you guys clear? Sorry. Oh, 10 crore. Are you guys clear? The next entry will become what? Bank to debenture allotment 60 crore. 60 crore. Are you clear? Done. Guys, do the third question. Guys, from now on, do the question. Third one. Guys, illustration number 3. Bank to debenture application 3 crores, 3 crores. Debenture application to 10% debentures 3 crores, 3 crores. Perfect. First entry. Second one. Uh, Always, Kumar, remember it. Nothing mentioned. We'll always consider the discount of the premium on allotment only. Since here in this question, premium is allotted in the premium, sorry, the journal entry becomes debenture application account debit to security premium. Guys, in this question, are they redeeming it at par or premium? In this question, yes, in the last line they have mentioned it at premium, so we'll be considering it on the premium. So it becomes debenture application account debit to debentures account to premium account since it's been issued at par. Guys, question number 4. Again, in the question number 4, you are redeeming it at what? A premium amount. You are redeeming it at what? A premium amount. So whenever it's a premium amount, what we should do? We should be recording a loss entry. So see here, guys, first one, bank account to debenture application 120 crore, 120 crore. This is standard. Now see here, debenture allotment 17 to 4 crore, 280 crore. This is standard. Then I have to be recording the loss entry of 40 crore. But the money received will only be 280 crores. Are you clear? There's that extra entry of 40 crores. Are you guys clear? Guys, any doubt in this? Guys, anyone any doubt in this? So you can always put top all the zeros. Yes, Ashish. This is going to be 4 or 5 mark question. Yes, everything, always nothing mentioned. We are going to be considering it at pre allotment itself. Guys, illustration number 5. Guys, everyone, illustration number 5. Guys, done. Illustration number 5. Guys, done. Illustration number 5. Now, what are they issuing it at? 150 lakh? Redeemable at a 5% premium. Redeemable at a 5% premium. You are getting 50 on application, 44. So the journal entry is bank account to this. This is my first entry for application. Now here, this is the journal entry. Now the loss, you can always combine it. So if you see the journal entry, I'm making a loss of 6 per share. So 6 into 150 lakh is 9 crore, plus you're issuing 150 shares at 5 debentures at 5 premium, that is around a 7.5 crore. So the total loss of 1.65 crore can be combined together. Guys, this can be combined together or you can write it separately, that is okay. Are you all clear? Guys, are you clear? Okay. When see what happens is debentures issued as collateral security. What does it mean? Let's say for an example, you have taken loan from somebody. Now what it says is, see, if you don't pay this loan back, if you don't pay this loan back, the creditor has a right to issue debentures on behalf of the company. On behalf of the company. If the company fails to pay loan, the debenture will issue debentures on behalf of the company. When the creditor issues debentures, he will get money. The creditor will take the money and the company will pay the debenture holder. Okay, this is happening in the future. This is known as debentures issued as security. Are you clear? Guys, see here. Let's say I've taken loan from Jami worth 10 crore. I don't have money to pay. If I say Jami has a security of my debentures, that is, I'm giving a surety of debentures, what happens is, if I don't pay money to Jami, Jami has a right to issue debentures on behalf of company. Okay, when Jami issues debentures on behalf of the company, people will pay money for the debentures. It's like a share. People will pay money for the debentures. That money Jami will take and make sure our loan is cleared. Jami is my creditor. So I'm saying Jami will take that money from the debentures and she will clear off the loan. When will she exercise this right? She will exercise the right when the company does not pay her the money on time. Okay. And company will pay back the debenture holders little later. Are you clear? Now, what is going to be the journal entry for it? If I don't pay Jami, Jami will issue debentures and then collect the money. These are all futuristic. No entry is required in the books of accounts. Few guys will say, no, 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 I want the journal entry to be recorded. Since there is nothing on it, what I do, I pass an entry as this debenture suspense account debit. This is method 2. If they say pass an entry in the books, then you have to do debenture suspense account debit to, let's say, 9% debentures account. Are you clear? Are you clear? Now, debentures for consideration other than cash, it's the same thing. You'd have purchased assets to vendor, vendor to debenture account. Now, guys, see here. This is something you need to understand. This is actually not part of your syllabus, but they have asked in few of the RTPs. So let's just try understanding it, what it says. Uh, I want you guys to look into this question. RIA Limited issued 2014% preference shares of nominal value 1 lakh as follows to sundry persons for cash at 90% of the nominal value of 50 lakhs. What does it mean? What does it mean? See here, the total number of shares they want to issue is 20,000 into 1 crore. That is 20,000 crore rupees. I don't know how many zeros are there. I'll get confused with it. So let's try keeping it. Uh, now, guys, for all the reasons, I'll try ignoring as many zeros as possible. So that is, I'll write everything in crores so that it's becomes more easier. What does it mean? They are giving 90% of the nominal value of 50 lakh. That means they're issuing it at a discount. How much discount? 50 lakhs one. They are giving it at a, guys, I think it is 1 lakh. I guess I think there is some mistake in it. Anyway, let's try doing it. 50 lakh if it is the amount, and the discount is what? How much is the discount? The discount is 10%. That means they're issuing it at what? 45 lakh. What is the journal entry for that? Bank account debit to debenture application 45 lakh 45 lakh, then debenture application account debit to debentures 50 lakh, 45 lakh. The 5 lakh will go as discount. Are you clear with the first one? Yes, Rishabh, you can. Thank you, Rishabh. They have clearly said 90% of the nominal value. 90% means 10% discount on Nikita. The second one, they are saying they are purchasing fixed assets worth 20 lakh. For that, they are giving them a shares debentures worth 25 lakh. What will be the journal entry? First one is going to be for your fixed assets purchase. What's going to be the journal entry for fixed assets purchase? Fixed assets account debit to vendor account 10 lakhs, sorry, 20 lakh, 20 lakh. Now they are giving how much share debentures to them? They are giving debentures worth 25. So the journal entry becomes here vendor account debit 20 lakh, because that's the money you are supposed to get, to debenture account 25 lakh. The balance 5 lakh will go as discount. Are you clear? Guys, read the sundry means group where you are not having any name to it. When we say sundry debtors, what does it mean? Group of debtors. Now last one, to the banker as collateral security for a loan, 20 lakh and 25 lakh nominal value. What will be the journal entry there? I would always write method 1 no entry. If you want it, you can pass it as suspense account debited. Now first you have to write a journal entry for bank receiving the loan. That will be bank to bank loan 20 lakh, 20 lakh. But for the security purpose, you will say no entry is required. Are you clear? You are getting loan for 20 lakh. For that, you will pass an entry as bank to bank loan 20 lakh, 20 lakh. Sir, for the first one, you definitely have to pass. For the second one, write a note that no entry is required. See, for taking bank loan, you have to. Guys, are you clear? Nominal value means face value, Chirag. So always you'll be passing entry for the face value when you're trying to credit it to the debentures account. Now, since debentures are issued as security, you don't have to pass any journal entry as per method 1. If they say method 2, then you would write debenture suspense account debit 25 lakh to debenture suspense account debit 25 lakh to debenture account 25 lakh. No, Ashish, there is one part we'll be doing it afternoon. Guys, today you'll have a session at 3:30 in the evening. So see you guys in the evening. Thank you, guys.